Now, the continuous work-from-home culture, remote work, it's proving to be a long-term pain for the real estate market in the world's largest economy, the United States, as only a part of pre-COVID workstations are currently occupied and buildings are still vacant. Some of the biggest landlords in the U.S. cities, they're defaulting or are close to defaulting on loans. Take a look at this story to know more.
It is a sign of widening pain for the property industry in the United States, as the prices fall and rising interest rates squeezes borrowers. More than 17% of the entire US office supply is vacant, and an additional 4.3% is available for the sublease. Nearly $92 billion in debt for those properties from non-bank lenders comes due this year, and $58 billion will mature in 2024. Not able to withstand this pressure, a Pacific Investment Management Office landlord has recently defaulted on $1.7 billion of mortgage notes, sending shockwaves through a troubled part of the real estate market. The troubled companies, including PIMCO's Columbia Property Trust and Brookfield, have defaulted on mortgages. For years, property owners across the world have been grappling with the rise of remote work, but low interest rates allowed the investors to muddle along more easily without worrying about the debt. Now it is a double whammy for the real estate sector, as the property prices are falling and the borrowing costs are also skyrocketing. While remote work hurts the office market, rising rates could push landlords, which often use floating rate debt, closer to a tricky edge. Decisions taken by the US Central Bank are also playing part, hitting the prospects of the real estate sector. Federal Reserve is on the path to raising its benchmark rate even higher, which will raise the borrowing costs and will result into increasing the pain for the real estate sector. The proliferation of floating rate loans is another reason real estate and property firms are not optimistic about the market. Floating rate loans is a market where interest rates reset more frequently, and about 48% of debt on office properties that matures this year has a variable rate. Even for owners who haven't defaulted, things are not easy. Blackstone's Willis Tower in Chicago has around $1.33 billion of commercial mortgage-backed securities and has seen monthly payments on that debt jump nearly 300% in February from a year earlier. However, some property firms are finding a middle path to deal with the crises. Some of the firms are looking to negotiate better terms with lenders or even explore other options, such as converting the buildings to apartments.
WION is now available in your country. Download the app now. Get all the news on the move.